Hello, this is Christopher Ruspe of Applied Financial Wisdom. I just finished my monthly research project and I wanted to share in a live video what some of our conclusions were about the overall market. Those who might want to watch this video are people who are interested in the climate of the stock and bond markets here in the US. Now, this is a live video, so it's unscripted. It might be a little rough in parts. I hope you'll bear with me. We know from looking at the price earnings multiples of the financial markets that they're very richly valued. For instance, the current price earnings multiple of according to Value Line of the 1700 Value Line large cap stocks is 18.5. Now, at the last market top, the price earnings multiple was 19, and at the last market bottom, the price earnings multiple was 11. So you can see there that we're way up near the top of the spectrum in terms of the price earnings multiple metric. In terms of the dividend yield metric, we're currently at 1.8% estimated dividend yield projected. In other words, that's the median, by the way. At the last market top, the dividend yield was 1.8%. And at the last market bottom, it was 3.7%. So you can see that we're really, really highly valued on the dividend yield and very highly valued on the earnings metrics. I think it's safe to say that we are in the throes of a speculative bubble. There are certain things that we'll look back on with the benefit of hindsight, and we'll be able to see very clearly that there were signs of a speculative bubble. Some people will ignore them and potentially lose everything. Other people will be paying attention and hopefully be better defended. A couple of signs that I've noticed over the last couple of years. Number one, the Robinhood phenomenon, which was tied into professional gamblers not being able to gamble on sports when sports were shut down. So you had a combination of professional gamblers and, I guess, millennial investors having access to trading technology they hadn't had prior. And of course, there's been a number of cautionary tales that have come out of that, as well as major sanctions against Robinhood, which is really no surprise. Another sign of a speculative frenzy is this digital currency phenomenon. I've continued to maintain that anything you can't understand is probably something you should avoid. Anything that Warren Buffett says you should avoid and is completely made up, you should avoid. And I think that at the end of the day, no government in the world is going to basically relinquish control of its populace, which is one of the main ways they control their populace is with currencies. Another phenomenon that we heard about a few months ago now, but you might recall the social media stock frenzy, both on Reddit and other social media sites. So these are just some of the speculative frenzy trademarks that we've seen. It's certainly not an exhaustive list, but they do kind of show you what the overall optimism versus pessimism spectrum is. At the end of the day, I think that we have a limited upside and very substantial downside, which is another way of saying that is a lot of risk for potentially modest returns. And Value Line actually tracks that. Value Line tracks a 3 to 5 year median price appreciation potential. And right now, the median price appreciation potential of the 1700 large cap Value Line stocks is 35% in 3 to 5 years. At the last market top, it was 35%. So we're right there. At the last market bottom, the price appreciation potential was 145%. So to put that in perspective, we have a tremendous amount of potential downside and very limited upside in the overall markets, at least as far as this indicator goes, the large cap markets here in the US. And another metric for that is the 18-month price appreciation potential, and the 18-month price appreciation potential is 15% right now from Value Line. At the last market top, it topped out at 12% potential. And at the last market bottom, it was a whopping 72% market potential. So again, the overall summary here is we don't know how long a speculative bubble will continue. The last days of a speculative bubble are frequently the most popular. And so we want to stay invested, but we want to do it very cautiously. If you're interested in knowing what our stock strategies are, what our mutual fund strategies are, and what our ETF strategies, keep an eye out for my subsequent videos. I'll try and have them appropriately titled so you can choose which ones, if any, you want to watch. This is Chris Ruspe of Applied Financial Wisdom, and if you're interested in seeing our social media videos, just hit like and subscribe at the bottom of this channel. Thank you, and have a nice weekend.